Hey everybody, George Chamberlin here, watching your dollars on this Friday morning. It is the 19th of October. 19th of October, does that date ring a bell? Well, if you're an investor, it will. It was on this date back in the year 1987 that the stock market suffered its biggest one-day crash in history, dropping almost 23% in one day. If we did that today, it would be a loss of about 3,300 points on the Dow Jones Industrial Average. It was a tough day. I was working as a broker back in those days, and I remember it very well. The world was much different back in 1987, 25 years ago. First of all, most of us weren't using the internet as a resource for information. Cable television was in its infancy. There weren't a lot of options out there. CNBC was not around. Most of the other major networks had not been created online. So any news that people got about what was happening that day either came from watching ABC, NBC, or CBS, which probably wasn't paying a whole lot of attention to this. They certainly weren't breaking in and doing reports about it. Maybe their broker gave them a call to let them know what was going on. That would have been the appropriate thing to do. But it was, despite that, a very dramatic day when you see the markets come down like that. And it did scare a lot of people away from ever investing again, which really is a very unfortunate thing, because on that date, October 19th, 1987, the Dow Jones Industrial Average closed at 1,736. Here we are today trading at 13,500 and change. Obviously, there have been a lot of fits and starts along the way since 1987. It hasn't been a straight, smooth recovery. But again, it just brings to my mind the old adage that it's time, not timing, that makes for great investors. And anyone who had the moxie to either enter the market after that crash or to add to it and stay the course, it did very well. One final thought: it cracks me up when I watch the talking heads on the financial networks, Fox Business, CNBC, Bloomberg, most of them who weren't even born back in 1987, say the stock market, when it drops 100 or 200 points in here, is crashing. A crash is not a 1% drop in the stock market. It's when the stock market loses a quarter of its value in one day. And fortunately, that doesn't happen very often. Watching your dollars, I'm George Chamberlin. Have a good weekend.